You may remember right at the beginning of Kwasi Kwarteng's eventful short chancellorship, he sat down with the governor of the Bank of England and said they were going to up their meetings from 1 to 2 a week. There has been intense contact between his office and Chancellor's office and the Bank of England Governor's office today. It's been an extremely difficult day trying to work out how they could reassure the markets. What they came up with 90 minutes ago was the Treasury saying, we'll give you our fiscal rules in a while. We'll give you that Office of Budget Responsibility report, which is an independent forecast on what the government's policies actually add up to in terms of future growth and debt and other metrics. We'll give you all that, and we'll give you some more policies that we're going to do on the supply side, planning, deregulation, and we're going to stick to the spending round. They hoped that would all give a bit of reassurance. For the Bank of England's part, they turned around and said, we remain committed to the 2% inflation target, and we will do what is necessary to keep interest rates, if necessary, active in a way that will get us to that target. But actually, the moment those announcements came out, closely coordinated, one after the other, the pound actually dipped again. So it doesn't appear to be working. And what we're looking at the moment, it seems, is a currency that is going to bounce around quite a bit, but with an overall trajectory, even after this intervention, that is downwards.
I'm not going to make any comment now. Thank you.
The Chancellor wouldn't comment on the overnight drop in the value of the pound. Kwasi Kwarteng's giant change of economic direction, borrowing for tax cuts, had already triggered a sell-off of sterling on Friday. Overnight, the pound lost nearly 5% of its value.
Are you planning to reverse the announcement you made last Friday, sir?
Although the pound plummeted overnight to a record low, through the morning and early afternoon it picked up, returning its value to what it was at the end of yesterday. But observers say that's not a vote of confidence, just markets convinced the Bank of England is going to raise interest rates.
What we're seeing is sterling falling, then recovering somewhat, but it's recovering somewhat in large part because the markets are expecting bigger interest rate rises in the weeks ahead.
And what will that mean for households?
Well, interest rate rises mean it's more expensive for the government to borrow. The change, even just since last Thursday, could cost us £14 billion a year in higher debt interest payments by the middle of this decade, but it also puts up the bills for those on mortgages. A typical mortgager might see their bill go up by £1,000 a year just because of the change in interest rate expectations since the mini-budget on Friday.
A short while ago, the Treasury tried to reassure markets, announcing it would unveil new fiscal rules to replace the ones it just ripped up. And it would publish the Office for Budget Responsibility's independent forecast of where the government's new policy is taking us. But markets will have to wait 8 weeks for those. At this cash and carry store in Birmingham, they think the falling pound completely throws their business plan.
So this product would have cost us about £20. Now with the exchange rate, this is going to cost us 24, which is about what we're going to sell it at. So there's no way that we can make a profit or pass the excess price on. A product like this, which we sell for about £9, would retail for about 20. Now it's costing us about £15. So, it's nearly 30 to 40% increase in costs.
At Labour's conference in Liverpool, they hope the economic turbulence will erode voter trust in the Tories' economic competence.
The Chancellor and Prime Minister resemble two desperate gamblers in a casino, chasing a losing run. But here's the thing. They're not gambling with their money. They're gambling with yours.
Suspended as a Labour MP, but here as a member, the party's last leader said the Tories' borrowing levels showed some nerve.
I seem to remember being universally condemned in December 2019 for my proposals for borrowing to invest in infrastructure. The numbers were infinitesimal compared to the amount that's now being borrowed. What for? To pay for day-to-day expenditure and to pay for tax cuts for the very richest in our society.
Are they the Corbynistas of the right?
No. Well, the Corbynistas of the right in the sense they're redistributing power and wealth in favour of the wealthiest and the richest in our society.
Many observers think the bigger worry is not the fall in the currency, but the rise in the price of government borrowing.
Prices of government borrowing is rising. It's rising faster, it looks like, over this month than in any month since 1957, when, of course, we had the Suez crisis. Now, what does that mean? Well, it just means it's more expensive for the government to borrow, which at some point will mean less public spending or higher taxes to pay for it. It also almost certainly means the Bank of England is going to follow suit, raise their interest rates and thereby make things more expensive for anyone with a mortgage.
Let me tell you, it's time for a government that is on your side. That government is a Labour government, and be in no doubt, conference, that government is on its way.
Labour delegates, already cheered by some opinion polls, think the government's troubles will work to their benefit. But if they persist, they could eat away at the economic inheritance and the scope for delivering on their own election promises.
Well, as we've heard, the pound's volatility has heaped huge pressure on the Bank of England to raise interest rates once again. Our economic reporter, Neil MacDonald, joins me now. Neil, why does the falling pound matter to the economy? Explain it in simple terms.
Well, if the pound keeps falling, then the price of a lot of essentials is going to go up, and that is going to make all of us poorer in the long term. Because if the pound falls, what we import costs more. And the problem is that the UK imports an awful lot of stuff, about £640 billion last year. And for example, within that, we import £48 billion of food and drink. That's about half of all the food and drink we consume. We import about 36 million tonnes of oil. That's about 80% of all the oil we use. The problem here is that, of course, the Bank of England has been raising interest rates already to try and bring inflation under control. If the falling pound brings higher import costs, then, of course, that means probably more inflation and therefore interest rates having to go up even higher, with all the implications that will have, of course, for then mortgage rates and the housing market. There is one tiny ray of light in all this. Of course, as our imports become more expensive, our exports do become cheaper, so it may become slightly easier for some of our exporters to sell abroad, though of course it's a difficult world environment to be selling more into at the moment.
So what's happening to government interest rates?
Yeah, I mean, this has been a crisis of two halves. So it's not just about the pound falling, it's about the fact that the interest on government borrowing has been rising really quite sharply. So if you go back to last week, the government, if it wanted to borrow money for 5 years, would pay an interest rate of 3.5%. By the end of the Chancellor's speech on Friday, that had gone up to 4%. What we saw today was it go up again to 4.5%, so another half-point increase. And as you heard in Gary's package, that will, if it gets translated fully into Bank of England interest rates, will mean the government having to spend £10 billion or more just paying for the money it's already borrowed. That's got to be funded in some way. That could be through higher taxes, which of course the government has said it's hard against. It could mean cutting public spending, or it could simply mean borrowing yet more money.
So what will this intervention from the government and the bank do? Will it bring the crisis nearer to its conclusion or not?
Well, the reality is that neither of these interventions tonight actually change the basic economic picture that the UK is facing. The reality is that the government is going to borrow an awful lot more money, and inflation is very high, remains very high. It's probably not even peaked yet. These statements from the bank and from the Treasury are designed to reassure investors that something is being done about this. For example, the bank in its statement talking about not hesitating to change interest rates if it needs to bring inflation back under control. But at its meeting in November, so about 6 weeks away, it's worth bearing in mind that the chatter in the markets today was about the possibility of an emergency rise in interest rates taking place by the end of the week. So it may well be that these words are not enough to reassure the markets long term.
Neil, thanks very much. Well, a short while ago, I spoke to the economist Gerard Lyons, a senior fellow at the Policy Exchange think tank, who's advised the government on their current economic plan. I asked him if the statement from the Bank of England governor was enough to steady the market turbulence we've seen today.
No, I don't think the statement from the Bank of England is enough. We had a statement earlier from the Treasury that I thought was clearer and resolved one or two outstanding issues that might have been covered on Friday. But in terms of the Bank of England, it's partly a case of managing expectations. I didn't think the bank would do anything dramatic today, but what's been left up in the air is they didn't mention quantitative tightening being reversed, and they've made it clear that they're not going to have any emergency move. But it has to be said, though, that any emergency move by the bank, for instance, raising interest rates, might not have really calmed the situation. I think what we need to do, given both the Treasury and the Bank of England statement, is see how the markets settle down in coming days.
But is that enough, that kind of wait-and-see approach? You said the bank didn't go quite far enough. What do you want them to do, given your concerns about doing an emergency rate increase? What is left to them to do now?
Right, let's go back to why we are in this situation in the first place. At the end of last week, obviously the key event was the mini budget from the Chancellor. That was primarily addressed or aimed at addressing issues for the general public and for businesses. Hence, it was well received by the CBI, the Institute of Directors. What the mini statement failed to do was to address the concerns in the financial markets. And that was on top of what had happened last Thursday when the Bank of England had raised interest rates by 0.5 percentage point and had gone ahead with quantitative tightening. So they didn't raise rates as much as the markets had hoped for last Thursday, and they announced that they would be adding gilt supply to the market.
Gerard, aren't you just rewriting recent history? Because actually you're putting all of the blame on the bank. But what really spooked the markets was this surprise tax cut for the wealthiest people. Actually, the markets are reacting to a disastrous economic experiment that's gone wrong.
Well, I was answering about the bank because your question was about the bank, but you're quite right in terms of putting the focus on the mini budget last Friday. In terms of the mini budget, I was surprised by that tax reduction at the top end. I'm not sure why they announced that last Friday, and it wasn't really made clear as to why they were doing that apart from the idea of tax simplification. What we did see last Friday from the Chancellor was a clarification about the energy price cap. That and reversing the pre-announced tax increases, both of those factors, the energy price cap and reversing the tax increases, were aimed at basically stopping the economy imploding. And indeed, 82% of the tax changes last Friday were just reversing the corporation tax increase and reversing the national insurance increase. If they had done just that, the markets might have reacted fine. But by adding that tax change, it added to the uncertainty, particularly as the budget was not accompanied by a medium-term fiscal plan, and also as the budget was not accompanied by a statement for the OBR. So there was too much uncertainty left up in the air. So what we now need to see is the Chancellor, in my view, clarifying the issues. Sorry.
So you agree that what spooked the markets primarily is that surprise tax cuts for the wealthiest, in which case, would you like the Chancellor to delay that, to say he's going to reinstate that top rate of tax?
No, I think we've moved on from that. What the real issue I think the Chancellor now needs to do is to differentiate between his strategy, which is a pro-growth strategy, and what the markets fear for, that it's a sort of let's go for growth, where it's about boosting demand.
One economist described the government today as a doomsday cult. Are you the cult leader?
I'm not sure why you're directing that at me. I'm not a member of the government or anything like that. What I was supporting was the idea that we needed to use fiscal. No, well, I had nothing to do with the mini statement last Friday, and it was news to me when the details came out. What I have been arguing for was the need to use fiscal policy more proactively. We mustn't be in the hole and dig deeper. For instance, 10 years ago, the Treasury's argument was that weak growth justified austerity. I argued against that at the time because it was wrong. In the last couple of years, the Treasury has argued that weak growth justified tax increases to get the finances back into shape. I've argued against that. What we need to have is more flexibility on fiscal policy in the short term to stabilise the economy, and I think that's been the right attitude to take. But as I indicated earlier, I was against those unexpected and unexplained small tax changes on Friday, even though in the scale of things they were small compared to the reversal of the tax increases. They spooked the markets. Okay. So it's a clear indication that while the Chancellor was aiming his policy at the general public and at business, he failed to, and maybe the bank didn't help on Thursday as well, failed to address those worries that were clearly evident at the end of last week in the financial markets. And unfortunately, that period of instability could still last for a little while longer yet.
Gerard Lyons, thanks very much. Well, joining me now is Labour's Shadow Climate and Net Zero Secretary Ed Miliband. Ed Miliband, you used to advise Gordon Brown when he was Chancellor. How perilous a moment is this for the UK economy, in your view?
I think, first of all, it's a deeply worrying situation for many families and businesses that are watching events unfold. And it is a perilous moment. And it's a perilous moment born of, first of all, complete incompetence. I mean, this is the most blundering performance by a Chancellor I can possibly remember. To publish, to do a budget without any fiscal numbers, that was bound to spook the market, and then to double down on it on Sunday, having, if you like, bet his shirt on Friday, he then doubled down on it on Sunday and said he was going to have further tax cuts, more unfunded tax cuts. So, look, I think.
And do you think what he said today and what the Bank of England governor has said today, is that enough to steady nerves in the market?
Well, look, I think look, there is both the short-term disaster of what he did on Friday, but then there is a longer-term issue about the strategy. You see, I think what's interesting about this, and you put it to Gerard Lyons, the markets don't believe the economic strategy. If the markets believed that growth was going to magically come from these tax cuts for a few people at the top, we wouldn't have seen quite this reaction that we've seen. So it is both tactical, terrible blundering, but also the government strategy is not a strategy that's going to work.
Business was very supportive. You know, the CBI put out a very effusive statement, so they're onto something about growth, aren't they?
Of course, businesses want lower taxes, Kathy. But if the central claim of the government is going to magically boost the growth rate and people don't believe it, and look, I do think there's something important about what we're saying at our conference. We have a different view about how you get growth. If you invest in the green economy, if you invest in good jobs, that is the way to get growth, and you've got to do it in a responsible way. And I do think this is a very historic day, because I think the Conservatives have lost their reputation for economic competence. This is the height of economic irresponsibility that we've seen.
Right, so if you were in government and you hope that this is a turning point and you'll get in and you'll be left to pick up the pieces, people are now predicting mortgage rates of 6%, topping 6%. Millions of people will find themselves unable to pay their mortgages. What will you do to help them?
Well,
what would you do in that situation?
I tell you what, if we were in government at the moment, we wouldn't have made the appalling errors they've made. But the idea that you wait, 8 weeks to unveil their fiscal strategy, a couple of months, when you're seeing this happening, I mean, they should.
Okay, but what would you do?
Well,
mortgage rates at 6%. What's Labour's plan?
You've got to avoid that situation happening. Now, in the end, those questions are a matter for the bank. But the point is, there are ways to restore confidence. You should be setting out a proper fiscal plan now for how you're going to keep debt under control. The idea that you're going to wait 2 months and see what happens is, if you like, piling more irresponsibility onto what we've already seen.
But you've sort of dodged the question of what Labour.
You've got to avoid that situation coming about.
But this situation is happening now. It's unfolding.
You'd obviously have to help homeowners in those situations.
Right, so a kind of bailout.
Well, no, you'd have to help homeowners in different ways. But the point is, you've got to avoid getting to that situation, right, Kathy, by taking action.
But would you sympathise if some people said, I can't pay those mortgage bills, I'm not going to pay, there's sort of mass non-payment, the kind we saw about the poll tax?
I'm not going to be getting into that speculation, but what I would say is that when the financial crisis hit in 2008, and when people were facing very difficult times, you take action to help homeowners and others. But I do say, this is an unfolding situation. You've got to take action now to stop it getting worse.
Right. You back the Conservatives' cut to the basic rate of income tax.
We said we're not going to reverse it. You're right. We said we're not going to reverse it.
The Shadow Chancellor suggested that would be paid for by borrowing, but you've also criticised the Conservatives for borrowing too much. So do you accept that if you get into power after the next election, borrowing would have to rise under Labour or the Conservatives?
Well, let's see what the figures they set out. But let me tell you the difference between us and them on this borrowing question. They've left tens of billions of pounds on the table in a windfall tax that they could have raised. Why?
Well, they have done a windfall tax, by the way.
But they could have raised tens of billions of pounds more, and Liz Truss set her face against that. They could have decided not to cut corporation tax or reverse the rise in corporation tax to the tune of £19 billion, which is what they've decided to do. They could have decided not to cut the top rate of tax, as they've decided to do. So, we would never have got into this situation. You would never have had a whole series of unfunded tax cuts, leaving money on the table in the way that they've done.
OK, unfunded tax cuts. You've got a few unfunded tax cuts. You want to increase the minimum wage to reflect the real cost of living. You want inflation-busting pay rises for public sector workers, according to the unions. How will that be funded? Is that going to be through raising taxes, or is it going to be through raising borrowing?
Every penny of what we set out in our manifesto will be fully funded.
Yeah, but you criticise the government for waiting to set out their plans. This could be years away, this manifesto.
We've set out very clearly plans that we have. So, for example, today, Rachel said that we were going to reverse the cut to the top rate of income tax, and we were going to use some of that money to help deal with the real crisis there is in the National Health Service. So everything we say will be properly funded. Of course it will.
You haven't set out how you'll fund the promises you've made so far this week.
Let me talk about my own area of the climate investment pledge. We've said it's right to borrow to invest, £28 billion a year. And why is that different? Let me just explain why that is different. Because there's a return on that investment. It's not some fantasy economic theory. It's about saying let's invest in good jobs at decent wages and, yes, to raise the rate of growth.
Just finally, in your speech today, you set out 3 emergencies. But the slogan here, a fairer, greener future, is focusing on really just one, which is the climate change. Admittedly, a big emergency. But when there's the cost of living crisis, is it right to put the emphasis on that? For some people, it feels a bit sort of in the future.
Well, that is why the world is very different now. Because going green is the route to cut energy bills, it is the route to jobs. And the central argument of this conference is we've got to create a different kind of economy, an economy for the many, not an economy for the few. And the way we do that is by betting on a green economy, investing in a green economy. It'll bring down bills, it'll give us energy security, it'll create 500,000 jobs, our plans, and it will tackle the climate crisis. And what a contrast, Kathy, between a government that is frankly falling apart and a Labour Party that is showing how we would govern the country and how we would give people the change they really want to see.
Ed Miliband, thanks very much.